Tell us a bit of background about your business, when you started up and what motivated you to go into mortgage.
So started 10 years ago. I had bought a couple of investment properties, and I remember calling the broker I'd used at that time and said, 1 week before settlement, I'm like, mate, where are my documents, like settlement's next week. And he's like, so I'm like, you've forgotten about me. So anyways, had a very poor experience, delayed settlements, paid penalties, all those things. So I'm like, you know what, I can do this better. So that's what triggered it, and put wheels into motion, did my courses, and that's how I got into it.
Great. Well, so congratulations on your recent award.
Thank you.
What does 2026 look like for you?
2026, there are obviously a lot of challenges with just the way the market is, but we are on a growth trajectory. So I've already spoken to a recruiter. We're hiring more people. I just hired in September an ex-banker, 20 years experience. So there's a lot of growth coming our way, and we're just gearing up for that.
Thanks, Rishi. Over to you.
Thank you. All right, everyone. So today I just want to discuss, there's some major changes which has happened over the last couple of weeks in terms of investor lending, and I'll just touch upon that because it affects a lot of people in this room. All right. So as I said earlier, I just won the FVWA award, which was really, really heartening. I absolutely didn't expect it. To be a finalist was great, but to win it 2 times in a row, which was fantastic. So again, testament to my customers. They keep trusting me. They keep coming back. They keep referring. Testament to everyone in this room who's referred their customers to me as well. I would love you to keep doing that as well. You can say he's an award-winning broker, so you can trust him. He'll do the right job. All right. So what are the major shifts which are happening? Essentially around trust and company lending for residential properties. So 2 of the major banks, I'm talking about Macquarie and Commonwealth Bank. Commbank is the biggest bank in Australia, and Macquarie, they were very, very bullish on investor lending, especially to trusts and companies. They've stopped lending to that. Now, there's a big reason for that, and Macquarie was very open about it. Basically, they said, the guys on TikTok and Instagram who are not qualified to talk about this have gone about and said, you get unlimited borrowing. If you borrow in trust, go to Macquarie, right? So guys, even and I'm talking about no one in specific, but people like buyer's agents, they just out of their greed have gone and told customers, go to a Macquarie, talk to your broker, go to a Macquarie, get unlimited borrowing, create multiple trusts. They haven't spoken to their accountant, their financial planner, or their broker, and they come then to the broker and say, we've opened these 2 new trusts, get us more borrowing. Guess what? The APRA, which is the Prudential Regulatory Authority, as well as ASIC, also looks at those things. And they're like, guys, what are you all doing? It's so risky. This is not what lending is supposed to be about. It's supposed to be responsible. So guess what? Macquarie has a reputation bigger. Commbank has a reputation bigger to manage than earn a few dollars on interest lending to high-risk customers. So they've stopped it. 0. And that's a challenge because a lot of people have created trusts and companies just to borrow. So that's a big change which has happened. But that also means APRA has flagged it to all banks saying, guys, we are looking. So now please make sure that your scrutiny is tight, which means not only the big 4 banks, but even the smaller lenders, private lenders, the whole spectrum, everyone is under scrutiny from the regulators. So what does that affect? Even a small first home buyer who's looking to buy their first house, everything gets ticked off. There's a second layer of scrutiny happening. It's just taking more time to do the same thing. Earlier, I could get an approval within a few hours. That has doubled. So if it was 4 hours, it's now taking 8 hours. If it was 3 days, it's now taking a week. So be careful. Don't encourage those finance gurus online. Don't ask ChatGPT how easy it is, because all that report does go to the ASIC. So yeah, we need to be careful. What that does is, again, the role of the broker. We look at alternate investment strategies. There are still non-banks who would be more encouraging for that. So always talk to a broker, someone like me. I can then help and guide my customers to say, guys, okay, this window is closed, but these other windows are open. So let's talk about that. All right. So, as I said, access to diverse products. I've got about 40 lenders on my panel. And they range from obviously the big banks, their subsidiaries, the non-banks, as we call them, and the private lending space as well. So the whole spectrum is there. Anyone who wants to get into a house as a first home buyer, as an investor, they want to upgrade, we have the entire spectrum of lending available for them. We do obviously check the market every day. We know what's going on. So, they not only get a good rate, but a good structure and understand. So I have a customer who was looking to put an offer yesterday with for a property in Queensland, his first investment property. And the agent's like, I said, okay, where's the contract? Agent's like, I'll not give you a contract till the offer's accepted. I said, which world are you living in, mate? What does the customer know if the property is in the name of the title where you say it is? And the agent's like, oh, I didn't think of that. I was like, yeah, please get me the contract. Let us review it. Then we put an offer. I'm not a conveyancer. I'm not a lawyer, but this is basics. And the customer was so grateful. He just sent me a text this morning saying, I don't know what would I have done. I was happy to just put an offer blindly. So it's just things like that, which I'm obviously there to help, give that personalized service as well. There are complex regulations, and we do work with accountants very closely to make sure it's a watertight structure as well to the customer. And obviously, we're here to secure better deals. I had a customer calling me from the branch at NAB saying, the branch guy is giving me this rate. Can you do better? I was like, yeah, he's at least 20 to 30 points higher than what we can give. Get out of there. And we could get that very quickly. So with the same bank. So I think it's a testament that brokers are there to help the customers, not just the bank. All right, a couple of case studies. So there was in the midst of this drama with Macquarie and CBA, I had a customer, as I said, they bought a property, they were settling in 3 weeks. They were going to do it through an investment vehicle like a trust structure. And then they were always banking with Macquarie, and Macquarie said no. So they were stuck. So luckily we have, as I said, 40 other lenders on our panel, and we could take them to another big bank at a very, very sharp rate, better than what Macquarie was offering, because they had a bigger portfolio. But they were in panic stations when they came to me. And they're like, Rishi, we're going to lose the property, we're going to lose the deposit. What can you do to help us? And we obviously could help them get it settled, get it approved on time, get it settled on time, so that nothing was lost in that whole process. Cool. The second one was, I spoke about this last week, but I had a customer came to me, investor, they're like, we're looking to buy this property in our neighborhood. They were capped out in how much they could borrow. And they're like, what can we do? Luckily, I know them. So I'm like, don't you have a daughter who's, working and doesn't have a house yet? They're like, yes. I'm like, okay, why don't we involve her? She's like, no, we don't want to involve her into the trust and all that. I said, no. Why doesn't she buy the property? Now, how does this all pan out? They were going to buy this property, gut it out, either renovate or break it down and build a brand new one, and in the next 3 to 5 years, sell it. I said, do you understand are you happy to pay the capital gains which is associated with those things? They're like, yeah, we factor that in. I'm like, how about we reduce that to zero? And then their years perked up. So I'll just take you through that case study. So that was the whole process of inviting the daughter in as a purchaser. As a first home buyer, she can't avail of the schemes because the property value is more than $1 million, but she could borrow $500,000 in her own name. What that did was they got $500,000 extra cash to do what they wanted to do. So that's what they're going to do. They're settling next week, 1st of December. They are going to, we did a nomination sale, put it in the daughter's name. Daughter bought it as a first home, paid the stamp duty. They're going to then put their own money, gut it, either renovate or build a new one. They're just deciding that. 3 years later, when she sells it as her own house, PPR, as we know, the tax rules for your own house, when you sell your own house, there's no tax on the profit. Whereas if you sell an investment, either in your personal name or in a trust or whatever, there are taxes, capital gains tax to be paid. So they are hoping to double the money, hoping to make another $1 million. So I said, we saved you $250,000. They are not asking me what the rate is, obviously, because even if I'm saving them $5 a month, they're saving $250,000 down the track. So that's it's not only about a great rate, it's about a great solution, which we overall provide. So we've tackled two things. We've looked after the investor, but we've also given the first home buyer a house where she can call her own. I've also pushed them to get some financial and tax planning advice. So they are talking to their accountant and financial planner about this. Cool. That was the long-term strategy. Who are my ideal referrals? Serious property investors who want to really make use of the right structures and build their property portfolios from scratch. And these are in the residential property markets. Please, serious property investors who ideally not coming and saying, should I buy an investment property? But more that we are here, we've capped out, how do we take the next step? First home buyers who need a helping hand. We are all for that. I have a team now, we are 8 of us, and I have a specialist who only looks after first home buyers, including myself, to hold their hand and say, these are the government benefits you have. It's never a better time to be a first home buyer, trust me. When I bought, I had to pay stamp duty, I had to pick up LMI, everything. Now, you just need 5% deposit, get into your house. Such a good deal. And for home renovators who needs funds to upgrades. We spoke about that a lot today, but to all the architects and all the builders in the room, when they need funds to upgrade, we can strip out equity from their house, use that, and they're building value. We know for every dollar they invest, they get about $3 back. So, but they need money and they need it fast. Most of your projects get stalled. So pass them my way. I'll be more than happy to help them take that next step. Cool. And that's me. Any questions in the meantime? We do have a minute.
We've got a minute left. Any questions? Yes.
Interest rates coming down?
Interest rates are obviously a big topic of discussion always, but they were supposed to happen in November, but they didn't happen because the employments were pretty good, and hopefully a February, but who knows? I don't have a crystal ball, but if they do come down, it will push the property market up again.
What do you predict?
Wishful thinking is to bring it down, but I just think that more importantly, rather than just looking at the different metrics to bring it down, I think the economy needs a boost because, as Anthony said, the stock market is not looking great. There are some headwinds coming that way, and without a rate cut, the business confidence is not going to really perk up. The ATO is literally with a whip slamming everybody. So without that rate cut, it's not going to really. A rate cut would really help, but without that, it's going to get even tighter. Thank you very much.